Eliza, it's been a tough market for property investors in 2020. What does the future hold for property investors in 2021?
Payroll data indicates that the biggest job losses have been across the food and accommodation services industry, with 17% of payroll jobs lost since March. This is important for rental demand because people in this industry are more likely to rent than any other. Net overseas migration is expected to drop from around 232,000 net migrants in the 2018-19 financial year to just 31,000 in 2020-2021 due to COVID. This will also mean subdued rental demand, where most migrants initially rent when they first come to Australia from overseas. However, the rental markets most affected by the pandemic are inner city areas that have had high exposure to overseas migration and relatively high levels of new development and added supply through the conversion of Airbnb properties to the long-term rental market. Rental value increases have still occurred in a few outer suburban and regional rental markets of Australia. In Sydney, gross rental yields were at near record lows in September at 2.9%. Across regional New South Wales, median gross rental yields were higher at 4.5%. Rental market conditions are likely to stay weak in inner city areas until domestic and international borders are open. In Melbourne, gross rental yields were at near record lows in September at 3.3%. Across regional Victoria, median gross rental yields were higher than the city at 5%. Inner city Melbourne had the highest exposure to overseas migration than any other region across Australia, so it's been a real challenge for investors to rent out these properties. That's likely to continue until international borders reopen and people consistently travel and migrate once more. In Brisbane, gross rental yields are sitting at 4.4%, down 20 basis points from September 2019. Across regional Queensland, median gross rent yields were higher at 5.3%. Rental market conditions are likely to stay weak in the inner city market, where high vacancy of apartment stock has seen unit rents fall since March. Investors may start to focus on outer suburban markets such as inner Ipswich and Caboolture, where unit rent values increased over 1% since March. Adelaide had the second highest annual growth in rent values of the capital cities at 2.6%, and rent values have been fairly steady since March. Rental returns across the city have been extremely stable, averaging a gross rental yield of 4.4% since 2014. Units in particular present a strong gross rent yield of 5.3%. Adelaide has traditionally been a market with low levels of investor participation, but in a post-pandemic environment, the stability of this market may be just what property investors are looking for. The Perth rental market is currently the fastest growing of the capital cities, with growth in rental income at 4.8% over the year. Rental income growth has been even stronger across regional WA at 5.3% in the year to September. Part of the tightening of the WA rental market has been the withdrawal of investors over the years, with investors accounting for just 17% of mortgage activity in August this year. With the rental market gradually tightening over the past few years and dwelling values likely near the trough of the market, I think Perth and parts of WA will slowly re-attract investor interest in 2021. Hobart and regional Tasmania had some of the most impressive growth and yield figures in the country before COVID-19. Annualised capital growth for Tasmanian dwellings was nearly 7% for the past 5 years. And average annual rental value growth was 5.5% over 2019. However, things have changed since COVID-19, with house rents falling 3.9% from March to September and unit rents down 5.6%. This once popular holiday destination has likely seen an increase in supply from Airbnb accommodation during a time when many renters working in hospitality, tourism, and the arts have lost work. The recovery of conditions for investors will come down to the ability to holiday in Hobart once again. ACT rent values increased 1.8% in the year to September, and the typical gross rental yield was 4.5%. It is worth noting that since the onset of COVID-19, rental markets have weakened, with house rents down 1% since March and unit values down 1.5%. Across Darwin, rental yields remain very high at 5.9%. This is the highest gross yield of the capital city markets, but it is partly a function of continued price falls. Rent values are rising across Darwin, but investors might be hesitant to enter this market until a sustained recovery in capital growth is evident.
If you're looking to buy an investment property, you should speak to your local mortgage broker. Policy and criteria for investment loans vary significantly between lenders, which could impact your borrowing power substantially. An experienced broker can help you navigate the finer nuances between lenders and make sure you are on the strongest footing to buy when the time is right. For more information or to find your local broker, visit mortgagechoice.com.au or call us on 1377 62.